Time to dive into the latest stock market action. We have Dr. Sei-wan, professor of economics at Ewha Womans University, with us on the line. Dr. Kim, thank you so much for making time for us today.
Good afternoon, Jinan.
Good afternoon. And let's begin on the Wall Street, where U.S. stocks lost significant ground. Not a lot of optimism with fears of recession looming, and the big R word there. Will we have to brace for this trend continuing through next year?
U.S. Stock indexes extended declines Tuesday as investors weighed fears about the outlook for interest rate against optimism surrounding China's reopening. The S&P 500 dropped 1.4%, while Dow Jones Industrial Average fell 1%, and tech-heavy NASDAQ slid 2%. It was the fourth consecutive day of losses for S&P 500 after stronger than expected U.S. economic data on Friday and Monday raised the fears that Federal Reserve will keep interest rates higher for longer to cool the economy and bring down inflation. The S&P 500 index has shed 3.4% from the beginning of December. The stock market rallied throughout November on signs that the Fed was winning the fight against inflation, which lifted hopes that interest rate increase would be slowing down. Asian indexes were mostly lower as they tracked Tuesday's losses on Wall Street. The Hang Seng Index in Hong Kong fell 1%, while Japan's Nikkei also fell 0.7%. Shanghai's composite index retreated 0.7% as of 3 p.m. in Seoul time.
And back here in Korea, Professor, the local bourse also dropped. The KOSPI dipped below the 2,400 mark yesterday and even hovered around 2,300 levels. The tech-heavy KOSDAQ didn't fare much better either. Help us break down these figures.
Today, domestic markets also extended declines over 4 straight days as U.S. and global equity markets declined, along with a higher possibility of U.S. Fed longer than expected interest rate hikes. Next year's Korean economic downturn expected is another stronger factor that declines domestic market. Recently, Bank of Korea released its next year economic growth forecast at 1.7%, which is much lower than previous forecast. The benchmark KOSPI dropped 0.4%, and KOSDAQ also shrank 0.2%. In KOSPI market, foreign investors and domestic institutional investors sales drove markets downside with combined net sales of 217 billion won. Foreign investors and domestic institutional investors massive sales became the major factor of drag down the domestic market over 4 straight days. Most of the 20 largest market cap stocks declined today. Samsung Electronics dropped 0.5%, but the second largest market cap, LG Energy Solution, also rose 0.7% today.
As for the $1 exchange rate, we've been seeing some encouraging changes somewhat. Is there some level of stabilization or improvements on the horizon?
Recently, there come more signs that U.S. dollar enters declining trend after a long, stronger trend. In Seoul's foreign exchange market, $1 exchange rate dropped temporarily below 1,300 won per dollar level, which is much lower than October's 1,400 won per dollar level. Dollar values against 6 major currencies also dropped by 2% compared to the beginning of last week. It is highly expected that the 3 major factors of strong dollar of U.S. interest rate hikes, U.S. inflation, and China's zero-COVID policy are all weakening recently. U.S. Fed Chairman Jerome Powell's speech on moderating in the speed of interest rate increase became additional factor that weakens dollar value. Gloomy forecast on U.S. economy next year adds more confidence on weaker dollar. IMF and OECD both expected next year's U.S. economic growth would be around 0.5% level, thanks to higher interest rates.
And major investment banks predict 1% growth for the Korean economy next year, looking from the outside looking in, far below the 1.7 forecast by the nation's central bank. What is behind this pessimistic outlook from foreign experts?
In last month's key interest rate decision meeting, Bank of Korea updated its economic growth forecast next year down to 1.7%. As we heard from previous report, the KDI, Korean government's largest think tank, also lowered its economic growth forecast for next year down to 1.8%. These 1% level economic growth forecasts are large downshift of Korean economy compared to this year's 2.6% economic growth. Major factors of slower economic growth for next year's are higher interest rate and global economic recession. Next year's market interest rate would be 8%, and global economic growth would be around 2%. Major investment banks are more conservative than that of the domestic institutions' forecast. The major 8 investment banks' forecast on Korean economic growth for next year are located between 1.0% and 2.0%. They believe that Korean economy is more affected by global economic slowdown because it is more dependent on foreign economies.
All right, Dr. Kim Sei-wan, thank you so much for sharing your insights with us. We appreciate it.
Thank you very much.